Good evening, everybody. Thanks for joining this evening on our indemnity insurance for healthcare professionals entering private practice webinar. We'll be starting in just a minute or so. We'll just wait for hopefully some last minute stragglers to attend, but thanks for coming this evening. Okay, right, let's get going. Thanks everybody. If you haven't been to our webinars before, we've been doing these now for about 6-7 months, and they're designed really to be an insightful set of webinars to help you through the essential steps of planning, launching, growing and succeeding in private practice. So the idea really is that, through this series, which we will extend into 2025, will help you avoid some of those common pitfalls and mistakes, give you really expert guidance from some of the best people in the private healthcare industry, and will help you save time in the process, but also help you get to seeing patients quicker and realizing those revenues into your practice quicker as well. So that's the whole, aim of these webinars that we've been running since back in April. So we've gone through 5 so far. Today is our 6th, and like I said, we're extending into the new year. And we'll talk a little bit more about that later this evening. So if you'd like to see the recordings of these, and this is the first one that you've attended, then we do have these available. Do get in touch with us, one of the team, and we can send you these recordings. So we've done preparing for success and the importance of planning in private practice. We spent the second one talking about marketing and launching and the importance of thinking about your website and your marketing budget and how you're going to attract patients, how you're going to build your practice. The third one in June was around the day-to-day running of your private practice, and we touched on areas such as practice management systems and how to select the right practice management system for your practice. Understand the finances. You are running a private healthcare business and as well as a clinic, so you need to understand the finances. That's very important. We touched on CQC for new practices, which we'll be definitely coming on to again with everything in the news at the moment around the single assessment framework. And we did a webinar yesterday on that topic, if that would be of interest to you. And then we did more of a marketing related one last month on getting started using video. We get a lot of questions relating to using video, wanting to do kind of face-to-face pieces or clinic walkthroughs. So Jovan helped discuss that last month. But today I'm delighted to be joined by Claire Howarth from Aon, and we'll come on to her in just a second. For those of you that are unfamiliar with Designated Medical, we are a consultancy, a full service consultancy who helps private practitioners, and we guide you through every stage of the journey when it comes to private practice. So as I mentioned at the start, from the idea of planning and you're starting to move out of the NHS for the first time, through to launching your private practice, growing, and then finally succeeding, and everything from accountancy and finance, CQC, medical billing, marketing, new project development and business development, right the way through to when you may, in the distant future, perhaps think about retiring and exiting, and you want to plan for that. We have a team of experts you can call upon that can help you. And the idea really is that idea that we want you to launch and grow your private practice with confidence and competence kind of moving forward. Today is all about medical indemnity insurance, and I'm delighted to be joined by Claire Howarth from Aon. Claire's been a real rock for me over the last kind of 6 months or so in helping my clients understand and navigate the world of medical indemnity. So Claire, perhaps I'll let you introduce yourself. Myself, I've got a marketing and operations background. I've worked in many sectors. I joined the healthcare sector about 7-8 years ago. I headed up a private practice in central London, and I spent the last 5 years helping doctors grow and launch their private practices. So, but Claire, over to you.
Hi, Simon, and hello, everybody. Thank you so much for having me here today to speak to you. Simon's given me a bit of an introduction. I thought I might start slightly with just saying Aon. Not many people may have heard of us that are in the doctor space, but we're a global professional services company. We operate in over 120 countries, and the types of products that we offer include things like risk, retirement, and health solutions. Personally, I work in the health and social care team, but my last 14 years of my career have been spent specifically focused on medical malpractice, and 12 of those were actually at a defence organisation. So my clients now range from public and private providers to individual doctors. So as I'm sure you can imagine, indemnity is something that we support them with day in, day out. So I believe that's why I've been invited here to talk to you all.
Absolutely, Claire. Thank you. And today is all about indemnity insurance. And as Claire said, that it's often a misunderstood area of insurance for doctors and for practitioners. So today, Claire's going to go into the differences between your indemnity requirements when you're working in the NHS and private practice. She'll tell you a little bit more about medical indemnity insurance and the differences between that and your medical defence organisation. I actually had a conversation this afternoon with a doctor who was unaware of the differences and asked me lots of questions. So I need to put him in touch with you, Claire. That buying cycle of what you should be thinking about when you are considering purchasing medical indemnity insurance. So Claire will talk you through that, and then we'll summarize some of the key points and have a Q&A at the end. So we hope it will last 20, 25 minutes or so, plenty of time for Q&A. Please save your questions to the end and use the chat function. As we've got a relatively small group this evening, we can unmic people and we can ask questions directly to Claire at the end of the webinar. But I will allow Claire to take the floor. Over to you, Claire.
Thanks, Simon. So I think the first thing to sort of state is, and you'll all know this, that all healthcare professionals owe a duty of care to your patients. And inevitably, unfortunately, sometimes things will go wrong and a patient can be harmed either directly or indirectly by a doctor's error, by their omission, or by poor judgment. And where a patient does suffer harm, then they do have a right to make a claim against them or their employer for damages. So because of that, all regulated healthcare professionals practicing in the UK do need to hold indemnity, and it's meant to be appropriate indemnity as well. So that's the real reason we're talking about this today. But if you don't feel very confident about indemnity and how it works, then I really want you to feel like you're not alone. So last year, Aon did a survey of about 650 consultants that worked in a private setting, and 60% of those didn't know what the basis of their indemnity was. So as Simon mentioned, what we're going to do today is we're going to try and cover off some of those fundamentals that will then hopefully help support you in making informed decisions when it comes to picking your own indemnity cover. So for most doctors, when you start out your career, you won't really need to do anything, essentially, because you'll go in, you'll work for the NHS and you'll benefit from Crown Indemnity. So what that means basically is that if any medical malpractice claim came against you as an NHS employee, then all your damages and all your legal costs will be covered. However, what NHS resolutions don't do, because their focus is for the trust in terms of resolving that claim as efficiently and cost effectively as possible, they don't actually support the doctors or any people involved in the claim possibly as thoroughly as you might expect. So for example, they would say, we need you to give evidence in this case, but then they won't look at your report that you write and think, well, actually, would this help the doctor's career? Are they putting themselves in a precarious position? Also, if the GMC were involved in that case, then the NHS would not provide any sort of support for you in terms of the defence. So lots of doctors, therefore, will take some separate regulatory cover. Now, it's not compulsory, but obviously, if you think that you may end up in a GMC case, which can be very expensive, and you'd have to fund those legal costs yourself, you can understand why it's advisable. It just really means that if you have regulatory cover, and most people do have this with the defence organisation, then it just gives you that guidance and support from a professional, reputational point of view. Now, it's slightly different though, however, when you move into private practice, because if you go into private practice and you start working without having claims indemnity, then you could risk your license. So the GMC make it a really clear requirement that you have to have adequate and appropriate indemnity. Unfortunately, they don't tell you what limit you need to have, which isn't necessarily helpful when you come to looking at all the options that you might find in front of you from different indemnity providers. Now, what I would say though as a guide is that most private providers would ask you to have £10 million in terms of that indemnity limit on an aggregate basis. If you are doing a particularly high risk specialty though, it may be that you want to cover higher, and it may be that private provider would ask you to have a higher limit as well. So if you're employed by a private provider, then they may actually offer you claims indemnity through their own corporate scheme. That may or may not include regulatory cover, so that might be something that you want to check out for yourself. If you aren't obtaining indemnity through an employer, then you would need to provide that yourself. So you'd need to go out and supply it. Now, there may be other types of indemnities that you need, and there will be different types of insurances, and I'm sure Simon and the team will talk to you about those. Those aren't our focus today. So, for example, your public liability and other things, they're not the focus. We're going to focus on medical indemnity today. And just to be really clear, I do mean medical indemnity. I have seen many doctors talk about professional indemnity. To be very clear, professional indemnity does not cover for bodily injury. So if you're treating private patients, you do need to make sure that you are covered for any sort of bodily or mental injury that your treatment might cause. Next slide, please, Simon. Thank you. So there are two types of indemnity that you'll find in the market. The first type is provided by the Medical Defence Organisation, so MPS, MDU, MDDUS. And then you also have the second type, which is provided by insurers. Now, I think at the last count, I was aware of over 35 different insurers that were currently offering medical indemnity. So if we look at the first point, so the defence organisations, the MDOs, the indemnity that they provide, it's a discretionary membership. That means that whether or not they choose to pay out is at their discretion. Now, this is a really rare type of indemnity. You don't see it in any other areas. For example, you'd never find, for house insurance or car insurance. So it's quite unique to the medical market. Now, insurers, they provide a contract of insurance. So it's very clearly laid out. Again, just, like you'd find with your home insurance, you'll see that there's policy wording with all the terms and conditions laid out. Now, if I just go back to that survey that we ran last year, 70% of the respondents actually were unaware that their defence organisation, it was a discretionary membership that they had. So it's really important that you understand the basis that your indemnity is held on. So the defence organisations, they aren't regulated. However, insurers, they're quite heavily regulated as a financial services company. So they are regulated by the FCA, the Financial Conduct Authority, and the PRA, the Prudential Regulatory Authority. So they're particularly concerned with how you are treated as a policyholder. They want to make sure that all the outcomes are fair, and there's a lot of guidance that the companies have to adhere to. There are also financial standards that they must meet in order to make sure that they can demonstrate that they would meet their liabilities. And if an insurance company was hit by financial trouble, then you have the financial services compensation scheme that underpins that. So that would step in and it would pay the claim for you. In terms of the defence organisations, if they did fall financially, then it could go back to the doctor then to have to pay the claim. So discretion, as I mentioned before, it's very flexible. There is no wording, no limits or sublimits, but also with that, there comes no guarantee. You will, if you speak to defence organisations, they will tell you that the discretionary element means that it is quite flexible. So I think it's easy to assume that they'll always exercise discretion in a negative way, but they will be keen to tell you also that they can exercise that discretion in a positive way as the healthcare environment shifts. Whereas because you have a contract with insurance, you will get what we call contract certainty. So there are very clear guarantees about what will be covered, what won't be covered, and to what limits it will be covered. And you will get that right at the beginning when you're making that decision as to whether or not you take out that cover. So if a claim comes in, whether or not it's paid, it will be at the discretion of the MDO if you're a member with them. However, if you have a contract of insurance, then it's very much based on the policy wording. The contract will literally hold the insurer to paying. If you have a claims decision that you're not happy with, then with the defence organisations, there is no official right of redress. They only really answer to their members. Whereas because the insurers are regulated, then if you're not happy with the decision that they make, you can go to the Ombudsman, you can complain to the regulators themselves, or if it's a Lloyd's of London policy, you can also complain to them. So lots of ways that you can go and try and have that decision overturned or relooked at. Next slide, please. Thanks, Simon. So Simon actually asked me, okay, we've got these two different types of organizations. What does that mean in terms of how they would service the clients? So I thought we'd just talk about two different examples to try and illustrate that. So for example, I've seen a case where a doctor, due to an accounting error, underdeclared their income for the year. A claim then came in, and the defence organisation looked at it and said, okay, well, this seems a bit strange. You know, the income you're earning, it doesn't seem right for the activity you've told me that you're undertaking. So what they did then was they launched an income audit of that doctor's finances. They saw that they were under indemnified, and then as a consequence they withdrew support for the claim, and they actually also stopped their membership. And so that put the doctor in a really precarious position, because they then would have to fund the claim fully themselves. They had no indemnity in place, so they had to start practicing privately, because they didn't want to risk losing their license, because they wouldn't be meeting the GMC standards. And the other thing is, if you do have membership or insurance, either type of indemnity declined, then it does put you in a very difficult position when you go on to try and find another source of indemnity, because you will have to declare that declinature. So if that same situation had come into an insurer, then because they're regulated by the FCA, then there is guidance that they would have to adhere to that says that the insurer must respond in a proportional way. So say, for example, this doctor had underdeclared their income by 50%, then the claim would be paid 50%. Obviously, there's still a shortfall, but it would be significantly less for the doctor to find. Now, I would put a caveat in that says the FCA obviously don't want to protect people who are acting recklessly. So if the underdeclaration had been willful or reckless, then the insurer would not necessarily have had to pay out. However, if it was a genuine error, that's when the FCA do try and protect people. The second example that I wanted to talk to you about, I actually came across in the magazine Pulse the other week. I don't know if some of you are familiar with that. It's a general practice publication. But in this scenario, a salaried GP had completed a high-risk sports activity form for a student. Now, that is classed as private work, and so it requires private indemnity. The student was indemnified by the MDU, and when the claim came in, which was in the region of 10 million, the MDU said that they couldn't guarantee that they would pay the claim in full. So this put the patient's solicitors on notice effectively that there could be a problem, and so they decided to include the GP partners in that claim. And so they named them, stating that they were vicariously liable for the salaried GP's actions. Now, the GP partners are with the MPS, and the MPS have said, we don't cover vicarious liability for medical practitioners. So this then leaves the practice in a difficult position, because they know that if that claim does go against them, then they would have to find the money themselves. So with the scenario of the insurance, the doctors would have known upfront exactly what that policy did and didn't cover from when they were making the decision to purchase. So if they would have known, for example, that vicarious liability was not included before they made that purchasing decision, and they could have made an informed decision at the time. So the other big difference that you'll find with defence organisations and insurers is the way that they underwrite. This is quite an interesting one. I think it's one that a lot of doctors struggle to get their heads around, because it's quite technical in some ways. But there are two main types. The first is occurrence-based underwriting, and the second is claims-made. Now, occurrence-based underwriting is favoured by the defence organisations. And effectively what happens is you pay up front, and you know that any claims that arise from the work that you did in that period of membership will be covered, regardless of when the claim comes in, whether it's many years down the line or after you've even left that defence organisation. and there's no requirement for you to report it at the time. Because the defence organisation is taking on all that risk, then it's usually a bit more upfront expensive, and you would pay upfront for that. Now, claims made insurance is slightly different. That's favoured by the insurers. It's by far the most common type of underwriting you will see that insurers offer. And there it is slightly different. So you will start your policy, and any claims or circumstances that you report during the live policy period for the work that you've done during that period, they will always be covered. Now, what is slightly different is that when that policy stops and you leave, then anything that you did not report against that policy will not be covered anymore. So the insurers can usually charge less because they've got a much clearer view of their liabilities. They know exactly what effectively they are on the hook for, so to speak. Now, we know that there are lags in medical claims. So, for example, you could treat a patient one day, have no idea that something had happened or gone wrong, and then 5 or more years down the line, you might see that claim come in, and you might have had no idea that that was going to happen, and so you couldn't have reported it as a circumstance or a claim at the time that you're with that insurer. So medical insurers understand that, and they have ways to overcome those gaps. So, for example, if you move from one claims made insurer to another, then what you would do is you would put on something that's called a retroactive start date. And basically what that does is you put it back to when you first started on claims made cover, and it means that anything that you didn't report to your previous insurer because you didn't know about it, then will be picked up by your current insurer. And then also, obviously, when you come to retire or cease practice, you're not moving to another insurer. The way that the insurer companies handle it then is they give you what we would refer to as an extended reporting period. Some people call it runoff. But effectively, what that means is that last year of the policy is open for you to report claims against for a number of times. And you will see a variety of runoff periods. Generally, they're sort of in the region of around 20 years. So if you are thinking about retiring and you're moving on to insurance, then just check to make sure what those provisions are for that extended reporting period. Next slide, please. Thank you. So it's probably quite overwhelming, all the different things that we've talked about today. I appreciate there's a lot of technical terminology that you may not be familiar with. So we actually tried to make the process easier by designing this little graphic to sort of help you think about all the different things that you might want to consider when you're going through that buyer cycle. And similar to a hierarchy of needs, the important elements we have at the bottom, so they're forming the foundation. So the first thing that you need to think about is how financially sound is this company? Now, if they're regulated by the FCA, that you know they've had to meet those Solvency II standards, so that should make your life a little bit easier. However, if they're not regulated, then have a look at the finances for the company just to satisfy yourself that they're in a strong financial position. Then you want to think about actually whether you have contract certainty. So are you comfortable with the wording that an insurer has offered you? Or if you're looking to purchase indemnity through a defence organisation, have you had a good conversation with them about the types of works that you undertake? And are you comfortable that they will be covered should the need arise? You then need to think about whether or not you have the appropriate limits and whether you've got the regulatory cover for the work that you're doing. So there will be different limits offered to you by insurers. Most defence organisations just tend to say that there is no limit, it's uncapped. But think about the type of work you're doing, whether it's high risk. Is there something in your contract that you might need to adhere to? Or if you can't see that, then perhaps have a little look online, see if there are any other claims in your area of specialty that would help give you some sort of guidance. The next thing to think about is have you got any gaps in cover? So this is particularly important if you are in insurance. So if you are looking to move from one insurer to another, have you thought about that retroactive period? Have you made sure that you've got that cover in place? Then we start to get to the more nice to have things. So are we getting those, nice value add benefits propositions? Is there the medico legal support? Is there guidance? Are they offering any sort of risk management information that might help you with your wider practice? Are they recognizing if your risk is really positive, and that you've not had many claims? Is that reflected in their pricing? And then last but not least, is the company easy to do business with? You might want to speak to peers that are already practicing privately and say, do you have any recommendations if you've had an indemnifier that you've found it's easy to work with? So hopefully that will just give you a little guide around exactly how to simplify the decision making process so you can make good informed choices. Now, most of you will be aware of the Patterson case. It had a huge impact on the UK healthcare system, and there was an investigation that followed that. Now, one of the outcomes of that report was that a recommendation was made to look at the indemnity system in place in the UK. And off the back of that, a consultation was launched by the government in 2018. And right from the offset, the government was quite clear that they felt their expressed preference would be that all doctors in private practice had insurance rather than discretionary cover. Now, we're a few years down the line, we've had changes of governments, but there's been a bit of a U-turn. And now the government has said that what they're going to do is implement a code of conduct for the defence organisations that will come into place by the end of the year. And one of the main reasons that they've said that they want that code of conduct is they want there to be transparency from the defence organisations around the decisions that they make about whether or not to pay claims. So it'll be really interesting, I think, to watch over the next couple of years to see exactly how that pans out, what the codes of conduct look like, and whether or not the government sees that as working to meet those requirements that they are hoping it will do. So I think that's a bit of a watch this space. So that's sort of me talking to you a little bit and giving you the high points. I think now it's really over to you to see if you've got any questions for me.
No, thanks, Claire. That was brilliant. Really, really useful. I learned a lot over the course of the last half an hour or so. So thanks for going into such depth. I think a couple of things that I've had questions about before we open up to the audience was the idea of could you have two sets of insurance, two different types of insurance running at the same time? So one with your medical defence organisation, perhaps you have taken out cover or discretionary cover with them and then realised actually it's not appropriate and then want to go down the insured route. Is that something that you can do? That's something that came up recently with one of my clients. So be interested to know your thoughts on that.
You can do it. I would always caution with dual indemnity, though, that you could run into some snags. So, for example, if you have two types of indemnity running and one claim comes up, you can't use both policies or both indemnities to pay for the same claim. So what you will find happens is at that point of claim, the two indemnifiers will have to sit down to work out exactly which of the indemnities will respond. And it might be that they both have to respond, but then they'll want to work out exactly which proportion each indemnifier would take. And what I would say to you is that if you're fortunate enough never to be in a situation where you've had a claim, it's actually quite distressing for the clinicians involved. And what you don't want to do then is be stuck in the middle of two indemnifiers trying to work out exactly who's going to respond and to what percentage. It's much easier to have one indemnifier so you know straight away that they will pick it up. However, I am aware that there are situations, as you outlined, Simon, where you might be running out a membership year, for example, with a defence organisation before moving to an insurer, or you can only get certain types of cover from different providers, in which case I would say try and be really clear with them about what it is you are expecting them to cover. So for an insurer, you can say, for example, I do not want you to cover XYZ. This is covered by my medical indemnifier, or another provider. And they can actually put that in your policy. So then it becomes really clear to the other organisation that that's what they're going to pick up in your behalf.
Okay. Yeah, that's been really helpful. I know I had one client in particular that didn't realise that it was discretionary, the MDO, and then wanted to take additional cover. But again, we seek your advice on that. And then one of the questions I had was around, like, how common is it for a medical defence organisation to refuse or a claim? Do you come across that a lot? Is it?
So the medical defence organisations have been around for, well, I think most of them for over 120 odd years. So they wouldn't be recruiting more members if they were just declining claims all the time. I think it's really important to note that. And there will be examples, and there are examples that we see. It, but it's very difficult because they don't have to be explicit in terms of exactly why they decline a claim. So the reason could be fully justified, but without that rationale, it's very hard to see. We are aware of some often they are involved in under declarations of income though. So.
Okay, that's good. A couple of other questions for me. One was around if you're working for a clinic as a private consultant, do you need to get kind of medical indemnity insurance if that the CQC registered provider has already kind of got medical indemnity as an employer?
So be really clear, have a really clear conversation with that employer and say, what is covered? Am I covered for all my practice at your clinic? If so, can you tell me how much? Normally, they will provide a letter, an information letter to you that tells you almost like a certificate of insurance that just says, look, it's a way for you to demonstrate that you've got cover for the GMC. So this will say, I have got cover through this clinic, and that will reassure you. Be very careful though, because if you do have indemnity through an employer, if you then do something private outside that employer, that the employer's cover will not cover you. It will only extend to the work that you do on their behalf.
And is
Also,
there a difference between being employed by a clinic, on a part-time basis, for instance, doing 2 days a week, and being a contractor for 2 days a week? Is there a difference there in terms of the insurer's eyes?
from it, it's not really the insurer's eyes, it's whether or not they have decided to include you in that insurance contract.
Right.
So if you look at your employment contract and you receive indemnity as part of that insurance contract, then you would expect to be covered. Just as if you were a contractor, then they would be very clear to you as to whether or not they expected you to provide your own indemnity. Now, in the UK, there are a few examples where private hospitals will cover their employed staff, but in the vast majority of cases, most private doctors will still be sourcing their own individual medical indemnity.
Yeah, that's the examples that I've seen, is that we typically recommend that the doctors that join as contractors for 1 or 2 days a week would have their own indemnity insurance, as well as the clinical practice having their indemnity insurance in place too. So
yeah,
that's typically what I've seen happen. So and then finally, from me, before we ask the audience for questions, how long do patients have to make a claim?
so the statute of limitation allows patients 3 years from the discovery of the alleged or the believed medical malpractice incident. Now that doesn't sound very long, 3 years, but remember, it is from the date of discovery. The other thing is, if you are treating young people, then that only applies from when they turn 18 as well. So you could be looking up to 21 years. Also, if you have a patient who finds out about the incident and then dies, then their family have 3 years from the point of their death to pick it up. So there are certain circumstances where that 3-year period will be extended.
Okay, thank you. Does anybody else have any questions they'd like to ask? Please pop them in the chat, or feel free to unmic yourself, and we can ask Claire a question directly. Would anybody like to ask anything? Okay, I'm not hearing anything, so I think I'll move on if that's okay with everyone. So firstly, I'd like to thank everybody for attending this evening. I hope you found it's obviously quite a niche area of private practice, but a really, really important one. And I think Claire has done a great job today, hopefully, of clearing up some of the ambiguity relating to medical indemnity insurance. Should you want to find out more, should you want, have some questions related to this, then do get in touch with us. We offer a free 45-minute consultation on whatever aspect of private practice that you want to discuss. That could be CQC, it can be medical indemnity, it can be related to anything related to private practice. So do get in touch, drop us an email at info@designatedmedical.com. We will direct you to the right member of the designated team. We do have a private practice WhatsApp group that is obviously free to join. So we'll send the deck around after this event today. So you'll be able to join that. It's been great. We've got quite a few people signed up over the last few months. And it's just a really good opportunity to share ideas, share experiences, and also have a community, a network where you can ask questions. So if you'd like to join that, let me know. Our autumn series of webinars continues. So next month we go back on a marketing theme. So again, one of the questions we get asked a lot about at the moment is relating to kind of growing private practices and the importance of called SEO, is search engine optimization. It's a big kind of area relating to kind of Google, and can really benefit a clinic in the long term. So we're going to talk you through the basics of getting started. So when you build your website, how do you create content? How do you make sure that when someone is searching for your type of treatment that you offer, or the area of specialism that you're in, then they're going to find your clinic over another doctor's. So that's something we'll cover in a couple of weeks' time on Wednesday the 13th. And then we're going to delve into pricing. So something that is very much overlooked in private practice is pricing strategies. It's I think sometimes healthcare is a little bit behind the curve compared to other sectors, but really important in terms of the future success of your clinic and how you can make it profitable and successful. Pricing it really is key. So we're going to do quite a bit on that in December with an expert called Mark Peacock, who will be joining us on the 5th of December. In the new year, I know that we are going to take a slight turn. We have got an event in January, I think, on the importance of patient reviews that we'll be doing with Doctify, that you'll be familiar with. Some of you are probably already signed up to Doctify. And then we're going to take a turn into kind of finance and banking. So, finance and accountancy. So we'll be talking about, as we head towards the end of the self-assessment at the end of January, and also the new financial year and the new tax year, we'll be talking a lot more around accountancy and tax and that side of things, which again is an area that we see is kind of perhaps misunderstood and overlooked in private practice. So lots coming up, and then we'll be announcing new webinars as we turn into the new year. So just seeing whether there's anything in the chat before we finish. No, I think that's everything. Like I said, if you do want to get in touch with us, then please do. Here's our contact information. Info@designatedmedical.com is the best email address to contact us on. We can then triage your inquiry through to the right expert in the team. But I'd like to again thank Claire for her time this evening. Thanks for a great presentation, Claire. We will make this recording available to you all, so we'll be sending that round over the course of the next couple of days. And hopefully we'll see you next month at our SEO webinar at the beginning of November. Thanks, everybody. Enjoy your evening.